That's the Fab for stocks of the day. But let's get in some more commentary. We spoke in the morning with Mr. Krishna Kumar, Mr. S. Krishna Kumar, on various aspects of the market, the elections, the global market sentiment. He had a lot to talk about the NBFC space as well and how he's positioning himself there. Listen into that conversation.
I think the global scenario clearly from a medium term is very favorably positioned for emerging markets. Clearly, growth in the developed countries will slow down, is slowing down, and the central banks are going to be on a hold and also not reduce liquidity, rather infuse liquidity like in the Eurozone. So we are into a situation where you also have supportive central banks globally, inflation which is quite benign in spite of crude being where it is today, and that provides a lot of window for emerging market central banks to also ease and create space for growth. So that's the narrative I think we would play for the year. You would definitely have some short-term factors like a Brexit event or China-US trade talks falling apart and stuff like that, which will create uncertainty near term, open up opportunities for people to get into the markets when there is a correction. So I think that's the way we look at the global framework at this point in time, favorable to EMs and particularly like a market like India, which is expected to get into a period where the next 5 years of a new government gets re-elected again or a new government comes in. So I think the local risks basically are a little bit of slowing growth at this point in time, but our belief is that with all the monetary space and also a little bit of fiscal space that could open up in the next 1 year, we could see growth rebound into the second half of this year in terms of headline numbers. The inflation, interest rate, liquidity scenario will turn a little bit more favorable. So I think it's a good position to be in from an equities perspective at this point in time. Using the uncertainties, I think we should get invested into the markets appropriately.
Yeah. Mr. Kumar, to that point now, while the indices are doing what they're doing, prices of various stocks are highly depressed at this point. I mean, the few of them from various sectors, I mean, we've seen a drag coming in for some of the consumption-oriented names because of the disappointing earnings. Telecom as a pocket has been written off over the last few quarters, now starting to gain traction. Real estate as a pocket, had seen some interest, but now that's faded away as well. So with prices being slightly more depressed, is this an opportunity according to you?
Yeah, I think the market, although did touch a new high, the broader market, including the 40 stocks out of the Nifty, are still at much lower levels, both in terms of price points and valuations too. So that provides the opportunity. Typically, we have seen in the past that these narrow rallies give way to broad market movements, and hence our belief is that with overall recovery in the economy, we do see that some of the beaten down names and more of the value kind would see a revival in terms of interest from investors, and already you are seeing some amount of repositioning that is happening over the last 15 days, where you are seeing some of the high quality stocks losing a little bit, given that also some growth weakness is setting in, and that money is moving away into more bottom-up ideas where there is tremendous value.
Would you believe that this recovery that you are referring to would largely remain bottoms up, or do you believe that some pockets could come up as well? A lot of people I hear in conversations at investor clubs talk about the capex revival, talk about how power as a theme could move up, and almost all the rising tide will carry up all the boards. So would you believe it's very bottom up, or could there be themes that could at large do well?
I think, while referring to more stock selection from a bottom-up perspective, I think, the broader rally in the markets would be, the rally would be broader, basically, covering a lot more sectors and stocks too. So we see a whole bunch of sectors around the cyclical space doing well. Take the infra, APC, construction companies, take the light engineering, industrials and capital goods companies, logistics. Also on the material side, a fair bit of improvement in demand and pricing outlook for the cement players after a long time seems baking in. Also, if you look at some of the metal space, something like steel and alloy steel has tremendous opportunities of growth in the next 5 years, given that we are more protected market and we have a lot of investments that could happen in the industrial space. So I think a whole bunch of sectors which have been beaten down and have been underpriced over the last 3-4 years are set for a good recovery, and that's where we would like to position ourselves incrementally.
Okay, so that's of course some conversations that happened earlier in the day as well. The markets as we speak have shrunk further, so 11,494 now, 1% lower.